Hi, I'm Elaine Ellingham, CEO, President, and Director of Omai Gold Mines Limited. We're a TSX Venture Limited listed company. We have 100% interest in the Omai Gold Project in Guyana. It's a past producing gold property, which is always a good thing. And we've been exploring on the property for about 2.5 years. So it produced 3.8 million ounces, and we've actually, in 2.5 years, discovered and put into 43101 another 3.6 million ounces. So we're quite pumped about this project. And obviously, as a brownfields project, it has a lot of advantages: road access, the old metallurgy, and we're really looking at extensions of the known types of mineralization. So we believe that this is something that can be fast tracked to mine again.
Elaine, love to see you and meet you. We've not spoken before or heard about this story before. So we'd love to kick off, just find out a little bit about you. What's your background? What have you done in the past?
Yeah, so I started as an exploration geologist more than 30 years ago. Immediately loved the business. I think exploration is the best business in the world. But like lots of people in exploration, it's a highly cyclical business. And so, in the downturns, I worked for major mining companies. I worked for Ellingham, a big copper company. And in the downturns, I worked for the juniors, which is really the exciting stuff. And that's where I believe a lot of the discoveries are made. Another downturn, I worked for the Toronto Stock Exchange. It ended up being 8 years. And that, again, had been a little bit of a dream of mine. I always liked the markets. And so, you set a goal, a target, and then you end up getting there. And it didn't disappoint. It was absolutely fascinating. And so I was the national leader of mining there, and also did the international business development. So that was pretty exciting, meeting mining companies from around the world. So when I left the exchange, I was a consultant for about 15 years, mostly focused on international companies, and started a couple companies, and I've sat on about 15 corporate boards, half of those since they were private. So kind of, working with companies as they go public. I guess one of my more interesting gigs was I joined the board of Richmont Mines in 2011. And it was kind of a sad small mine up in the Wawa Belt, and no one ever loved the Wawa Belt. And we almost shut that mine down, the Island Gold Mine, in 2011, 2012. Drilled beneath it, found, more mineralization, and that's today, Richmont was taken over by Alamos, and that's a 5 million ounce deposit today, grading over 10 grams per ton. So very fortunately, I'm on the board of Alamos, so I've been able to kind of follow that discovery through to a spectacular mine, and we're putting a $1 billion shaft down on that project today. So I mean, it's the discoveries to me, and watching a project develop is just amazing. So
well, okay, well, as I think a poster boy in the industry for sure. Tell me about the asset though. So obviously it's a former producer. It has produced in the past. Who owned it? How did you pick it up?
Great. Yeah. So the Omai project, when it was a mine, it was in Cambior. If you remember, that was a large, well-known Quebec company. They brought it into production around 1993, it produced for about 12 years. So this was a large mine. So it produced over 300,000 ounces a year. I think the peak year was 2002. They produced 356,000 ounces. That's a big mine. One of the biggest challenges was the gold price almost through that entire time was under $400 an ounce. So, I mean, it's the worst nightmare for a company. You bring your mine into production, the gold price sags. Very fortunately, it was fairly robust, a large-scale mine, and they were profitable the whole time. But so basically, when they were towards the end of production, they had acquired the Roosevelt property, which a lot of people would know, which is about 200 miles east of Omai in Suriname. And so the company got into a little bit of credit crunch, and basically they just decided to move the 20,000 ton per day mill from Omai over to Roosevelt. So that was kind of the death knell for Omai. Its destiny was to be shut down. So the good thing for us is that means between the low gold price and the fact that they took some of the mill and other assets over to the other property means that they didn't do exploration. So for us, that's awesome. You know, a mine that was shut down, and it's not like they drilled and looked for extensions. So basically after that, IAMGOLD took over Cambior, and IAMGOLD decided to relinquish the property to the government. So again, that is good for us because it means IAMGOLD did all the reclamation. It went back into the hands of the government. And so then a group of people acquired the property from the government. It is actually unique in Guyana because a lot of properties are mosaics of small properties owned by locals, whereas this property was held as in its entirety by the government. And so this property was acquired by the government, by this company. It was an RTO in 2020, and I joined the board in March of 2021 and took over as CEO a couple months later. So, so I mean, it is a good thing because the project came from the government, had been reclaimed, so we're like fully indemnified from any historical, small or large scale mining. So we hold 100% interest in that.
Right. Okay. So you picked up a foreign producer money. We talking about Gilt Creek and Wenmont. What's the plan? Because I'm always intrigued by how companies lay out their plan. You know, you were sitting as a sub 30 million market cap company. I'm not quite sure what your cash position is, but you've got to be efficient. So how do you see this, you know, panning out?
So I guess one thing is the Guyanese government is extremely interested in seeing mines come into production. So you almost feel like you're working a little bit in a partnership with them. I think some of the issues, like when Omai was in production, it employed 1,000 people. And this is in a country that only has 800,000 people. So it was literally the heyday of economic prosperity for Guyana. So there is a strong desire to fast track this. And very fortunately, you know, when we started drilling, we drilled a long strike, you know, below and along the flanks of a past producing pit. And the mineralization just continues. So we have like 2.5 kilometers of mineralization now. And we know it extends beyond that. So we basically were keeping our eye on the prize, which is our belief that this will be a mine again, and it will be a large-scale mine again. So we are continuing our exploration very aggressively. As I said, in the 2.5 years, we've got up to the 3.6 million ounces. We believe that can be expanded significantly. At the same time, we've started some engineering studies. Because we have existing tailings facilities. So we have to look at those, like, can those be reused? Can we expand them? How much capacity do they have? We know the metallurgy. So we can fast track some things like that. So unlike other companies, we are really exploration because we believe we can expand our resource, but we're also doing some things that sort of are the path towards a future mine. Does that sort of explain it? It's,
Yeah, it does. And you're sort of touching upon a few things which we're seeing in the market this year, where it's been tough 3 years for gold companies, right? And people are saying, well, it used to be a case of we'll keep drilling and we'll work out how big this thing gets. Now it's a case of access to capital is tougher. It's more expensive when you do get it. Part because share price is down, or people coming with alternative financing. It's expensive. So the ability to get to near-term cash flow seems to model which the Australians have run with for decades, but it's not necessarily a Canadian company thing. So are you seeing that? Is that partly why you're looking at the conversations around tailings, or maybe trying to work out how you kind of drive to earlier revenue flow?
No, not really, because I believe this will be, again, a large-scale mine. And so when you're building large-scale mines, as I said, when it was in production before, it averaged 300,000 ounces per year. I don't know if we'll be at that level, but we'll certainly be over 100,000 ounces per year. So you have to optimize that. I think what you're talking about, that model of sort of bringing smaller scale or incremental production online and bootstrapping yourself up, I think that model was tried a few times in the past, and I think it it has failed, and that's why the Canadian market doesn't really embrace it. And what tends to happen is in the timeline, by the time you start doing your incremental, the markets pick up because it's a cyclical business. And then suddenly what you did was inappropriate for the market by the time you get there.
Right. Okay. It'll be interesting to see how the companies that are trying it, see how they get along next year then.
Right.
And I hope you're right about the cyclical nature of the gold market. Obviously, gold price doing its thing for sure. But the cost of the capex component is still high off the back of inflation.
Just to address that a bit, though, Matthew, I mean, I was down at Beaver Creek, and a lot of the conversation was, yes, it was tough to raise money, but part of the issue was that the price, the valuations that our companies are getting, it's not reflective of our assets. And some of my large shareholders, they've told me, Elaine, don't look at the market. It's not reflective of your asset. So we've been hesitating to raise capital at very dilutive prices. So that's been a lot of the incentive of why I've been very conservative of, I have a Scottish heritage, what can I say? But, still make the dollars go a long way. So, I mean, we didn't want to finance at those prices because we did not believe, we know what the asset is, and we did not believe that was reflective. So basically you take your money and you, what I say is, high impact, low cost, and really focus on that. And that's what we've done. And if you look at the drilling we've done, the last, every hole we've announced the last 6 months has hit it out of the park. They've all been very significant for our deposit and for our advancement. And that's, again, low cost, high impact, the way we've been operating.
Well, tell me a little bit more about that, because you're going to, if you're trying to do that dance, as it were, to get that balance right between, not raising dilutive capital and, certainly not at these levels, because I think yourself, many CEOs will claim they're undervalued, and I think it's largely true in the market at the moment. Is how do you decide how you allocate that capital? I see what you mean about this sort of high impact drilling. You're talking about 5 to 9 grams over reasonable intervals there, which is obviously very different from the measured and indicated, which is 1.4, 1.7, 1.8 level. So how are you going about targeting your drilling and your modeling for the drilling?
That's a good question. I mean, I guess the other advantage of being on a brownfields project is someone was kind enough to make sure that all of the data was aggregated and compiled. And so, in fact, we inherited a massive database of things that goes back to even the 1950s. A very famous company, Anaconda, was down working on this property and put a few little shafts down in there. I have the drill logs, the original written drill logs from the 1950s. So the first step we did when we hit this project was basically put it all into a standardized modern GIS database system. So I would say that we've been able to be as effective as we can because with respect to the historical mining, we actually have all the blast hole data from the pit. It's like 1.2 million data points. So we have modeled all that. So I would say between that and our work, what you do in a lower price, a less environment where you can raise a lot of funds is you model and you think a little harder and you use people that are veterans in the business. And so, I mean, that's, if you have lots of money, you just put your 4 or 5, 10 drills out there and you start drilling. If you have less money, you make sure you put those drill holes in the right place that have high impact on your resource. And that's what we've been doing. And that's what a lot of the good companies have been doing. The junior companies, you'll see they're still getting good results, but they're spending a lot less money, and it's because they're really tapping into data systems.
And is it a case of, not biding your time per se, but it's a case of, putting enough news out there to make people feel that you're advancing, but at the same time not blowing through the capital structure, so you're sitting around, wondering, well, who's going to give me some money next? So how many drills are turning for you at the moment?
So we had 3 drills on the property, but we're doing an updated resource right now. So we usually stop drilling, assemble your assays and all your data handed over to your independent QP. And that's where we are right now. So we don't have any, the drills are on the property, but we stopped drilling to do that resource.
Right. Okay. And that resource obviously will be bringing some of these. Well, I assume they'll be bringing some of these latest assays that you've been putting out up until December. Will it? Yeah.
Yeah. That basically incorporates those. But the purpose, so we've done 2 43-101 resources 2 years in a row. But this one is more focused at, like, we're also starting a PEA. And so the PEA will, like all PEAs, you really rely on the performance and what it looks like in the first 2 or 3 years. Because the first 2 or 3 years of a mine, that's when you want it as robust as possible. That's when, you don't want anything to go off the rails. So a lot of the drilling we did this year was actually focused at where we believe mining would start, which is at the west end of our Wenot deposit. And why we would start there is that is outside of the past producing pit. And so our drilling really focused there. And right from the first hole we put in, it was good surprises. Our first hole in the west end there this year, there was visible gold in 38 places across 300 meters. We hit 4.07 over 31 meters, and there were 2 intervals of 10 meters of over 2 grams. So these are fantastic results. So the purpose of this program was not so much to prove the expansion of that 2.5 kilometer deposit. It was really to focus down on where we're going to start mining first to support our PEA, our preliminary economic assessment.
Right. Okay. And the language you're using is one of confidence, in the sense there's a lot of historic data. There's a lot known about the mineralogy, the metallurgy to a degree. And I know you're going to do some advanced engineering studies to kind of back up on the tailings and metallurgy. I think you mentioned so far, on water, I imagine. Everything that you need to say. Will it be a case of the PEA will be good enough to get you into position to mine, or will there be further economic studies required?
Well, there'll be more, and we'll have to do additional drilling for sure.
Okay.
But I think, one of the reasons to do it is, there's a couple reasons to do it. One is to just prove to the market that there is, it gives kind of a base economics. We believe that deposit can be expanded by at least 50% or more. So in that sense, it's not going to be the ultimate economic. It's not going to be what's going to be the pre-fees. We believe that deposit will be a lot larger. But it will also, and remember, this is a past producing mine, so it'll be able to answer the questions people have, like, can you reuse the existing tailings? What's it going to cost to expand them? How much do you have to expand them? Again, putting a pin in the metallurgy. We know that we're actually, our deposits are extensions of the past mine deposits. So therefore it will be the same metallurgy. We're going a little deeper on some of them. So we will have to do some metallurgical test work, but that'll answer some of the questions for investors that we can't really definitively answer to them now. So for example, like when this was in production, it was 93 to 2005. Recovery, it was a conventional carbon pulp mill. Basically the recoveries were 92, 93%. From that, included in that, it was about 32% was gravity circuit. So the question is, since then, in the last 20 years, are there new technologies? Mills are pretty conventional still, but probably the gravity circuits can improve. And so it'll just allow us to answer some questions to investors that I think we need to have as technical study behind us. Does that make some sense?
Yeah, it does. I'm just sort of, I guess one of the kind of questions that, you're right, the market is cyclical, but at the moment, we kind of sort of risk off, and you got some nervy investors looking as to where they should redeploy their, after taxation, where they should redeploy their capital into more certain projects. So for you, I think you're talking about doing, I think you talked previously about doing 20,000 meters of drilling, different types of drilling to give you certainty around different parts of the pit, and obviously answer the questions that the PEA is going to need. But whereas to do that, it's going to require money, And I guess the question people will be asking mostly is like, how long is the process that you're laying out going to take? And, when do we get to, when would there be a revenue opportunity, or is your exit different? Is your exit, we will then hand it over to someone who then goes and builds this thing out?
There's a lot of questions in there, Matt.
Yeah. What's the future look like? What's the future look like for you? Okay. That's where I'm going.
Yeah. So, I guess the good thing about these types of companies is the goals are the same. So whether or not this company transforms into a company that, builds a mine, we hire management that have, the skills to build a mine and operate a mine, which are not my sweet spot. I've obviously been involved with mining operations, but that's not we would have to expand the management team. I think the more likely destiny for this project would be, we're already at 3.6 million ounces. We have road access. We have, that historically there was an economic deposit there at a $400 gold price. So, every mid-tier and large company is looking to expand. And as we all know, organic expansion only takes you so far, and the larger the company, the more difficult it is. So most mid-tier companies are constantly trolling, looking for, 3-5 million ounce projects. I think because most companies would be making a first entry into Guyana, that you have to have probably 4 or 5 million ounces and a clear path to production to attract that type of an acquirer. It only makes sense because they're entering a new jurisdiction that they don't have familiarity with. The price has to be appropriate. So I think that we'll continue to kind of to expand the resources at the same time as we nudge the engineering forward. So the PEA is the first stage. I guess the other thing is, we would like to apply for a mining license in Guyana, and that PEA and some of the studies we're doing, we believe will take us in that direction. And in exploration and mining, it's all about de-risking a project. And so advancing towards a mining license will de-risk our project.
Right. Okay.
Yeah.
So there's I guess the standard process will be followed. The bit of the question there, which was around money to do this various drilling programs, are you going to be going back to market for that anytime soon?
Probably. We did our last financing last December. I have sufficient funds to finish the resource that's underway, and then the PEA in quick succession. So we actually are kind of running parallel. We're doing the PEA as well, but obviously the base of that PEA will be this updated resource that we're doing. So we expect that PEA probably mid-February, somewhere around there.
Okay.
So we have sufficient funds to get that there, and we believe that should again give our valuation a bit of a boost. We have a fairly strong set of shareholders, many of them who they believe in the fact that this was a past producing mine. There's resources, there's a road to it, there's so many things that are in its favor that there's a lot of those people believe that this will be a mine again. And so they are quite willing to put money in. It's just, as I said, I'm not in a unique position. There's other good companies out there with great assets that hesitated to finance because it was too dilutive. And so we will, I'm actually extremely optimistic. You haven't asked me about the gold. You probably follow the gold price, but I mean, the gold price has been over $2,000 for a while now, and really appears to have a tangible base to it. All the signs for the economy for the new year suggest that it's more of a risk on. And further to that, a lot of the news is focusing on the fact that the resource sector is underloved and and undervalued. So I do believe that 2024, is going to be a very, very strong year for mining for junior equities as well. I always say hope is not a strategy, but we do seem to be extremely well positioned. In I think it went from the Feds were talking about, the forecasts are for 2 interest rate declines. And I think that just went to 4. If the interest rates come down and, it's a slowing economy, everything's sort of boding well for gold having a good 2024.
Yeah, and we'd agree with that one. We violently agree with that one. Just if you don't mind, just finish off, lend us your thoughts on the political posturing by the neighbors next door in Venezuela. I think
Right.
most people discount it as political posturing. What's been your view? You're closer to it than I am.
Yeah, it's. I guess it. Even when I first went to Guyana, I'd heard about it, and I think it is definitely it's an internal kind of blustering by Maduro to his electorate. That is the fundamental basis of this whole thing. And, just for context, Venezuela has claimed that they have the rights to 2/3 of Guyana. And this is not new. 125 years ago, the International Court of Justice in France did a trial and said, yes, it belongs to Guyana. And so this issue has kind of gone to sleep over decades and decades and decades. And occasionally it rears its head. But right now, there is an election in Venezuela in October of next year. And Maduro he's lost a lot of popularity. There's 7 million people have immigrated from Venezuela. We've all heard about that. The economy is dismal. So it's like a typical pulling the national sentiment together and let's start a war and all this sort of thing. So it got diffused fairly quickly. And we could do a whole separate session on this because it is a fascinating thing. But you can see that there's subtitles in here. For example, Biden has been removing some of the sanctions. And that is to provide, that's against some incentive for Maduro to run a fair election in Venezuela next year. The Venezuelans just released some prisoners that Biden had negotiated for. So there's all sorts of subtitles. But bottom line for Guyana is, what stimulated this was the spectacular oil discoveries. And just going, yes, you talk about Venezuela and you have to talk about Guyana. So, it had been coined the poorest country in South America until like 10 years ago, and in 2015, when they discovered offshore oil, Exxon and a consortium started working, and now they're ranked the 10th largest accessible oil reserves in the world. Their economy is the fastest growing. The GDP growth in 2022 was 62%. 2023 forecasting for probably 100%. So now it's starting from a low level, but it is the fastest growing economy in the world. And this is, of course, why Venezuela is now looking at the oil fields of Guyana saying, hold on, 100 years ago, we kind of put up our hand and said those are ours. So it's not as simple as that, but I'm not concerned. It has both the Americans and the Brazilians have kind of stepped up and said, hey, we want to be in there. So I think it's like being the tiny baby brother. Remember, this is a country with an 800,000 person population, tiny country, English speaking, which is interesting and easy for me. But at the end of the day, it's a baby brother when you've got 2 big brothers, the U.S. and Brazil, saying, "Hey, we're there to help you."
Yep, that's actually quite a detailed answer. I've got a little bit more insight than I've had before, because we've spoken to a few other gold developers in country, and I think they would echo your sentiment and your knowledge there. Look,
Yeah.
Elaine, I appreciate you joining us today. Give us that overview. It would be lovely to kind of maybe get into the weeds with you on a bit more of a technical basis to sort of see how you're viewing this and how this project continues to evolve. So I appreciate your time today. Do stay in touch, please.
Will do. Thanks for your time, Matthew.